Good afternoon. I'm going to talk about how I find swing trades for options. I have a very unique way of doing it, and one of the main components I use is linear regression channels. And for those that don't know what that is, just basically a straight line from where the price starts and where the price ends, in which, if you look on the 4-hour chart, it is 30 days, and same with the 1 hour. So, but how I scanned for a couple things, and one of the things that I scanned for is I scanned for I have it set for ATR over greater than 2, which the ATR means average true range, which 2 is more than $2. I mean, I want a stock that's going to move. I don't want stocks that move 50 cents or 25 cents or $1. I want stocks that move, and they move more than $2 per day. And that's one of the things I look for. And the other thing that I look for is that I look for inside candles, and outside the regression channel. So okay, we'll look at the 4-hour, and I usually stick to the 1 hour and 4-hour. So inside candle is when you have this candle right here, the high and the low is right there, and the next candle is within the previous candle's high and low. So that would be an inside candle. So I look for a bunch of inside candles or consolidation in this average range that is below or above the regression channel. And so this particular stock is MCK, and right here, as you can see, it made some inside candles. There's one, there's another. So I like seeing that. That means it's consolidation. And when you're consolidating on a 4-hour time frame, it's getting ready to make a big move. And so when you're in a below the regression channel, you're looking for a move up. So I mean, and it can go low. I don't think just because it's below the regression channel it has to go up, because it does not. It doesn't have to do anything. It can do whatever it wants. But I would be looking for anything that crosses the bottom of the regression channel, which would be this 139.80 area, and the target would be the middle regression line. So that would be the target. I mean, it can go above, but I'd like to target one at a time, because if it's if it doesn't go through the middle and support and the resistance areas with conviction, it could just go to the middle regression line and just pop back down to the lower. So I always like to go from the lower to middle, and if it's got enough strength, it can boost its way to the higher and sometimes over. So that is one of the things I look for the most, is these inside candles on a 4-hour time frame. And sometimes you can go for it on a 1-hour time frame too, because you can see right here, this is the 4-hour on the left. On the left side of the screen is a 1-hour time frame, but you can see this is the consolidation area I was showing you on the 4-hour, and look at it just popped. It went to the middle, pulled back to retest this area, and then it went back up over. So you could have got in at the end of the day, whatever day this was, the 3rd, September 3rd, and held overnight, or you could have just got in the next day and you could have rode it to the middle of the regression channel, which is would have been a good swing for a couple days. Now I know you look at both my charts. I have different indicators and stuff like that, and then the reason I have that is because the 20 EMA, not just the 20 EMA, but the 20 moving average, whether it's simple or exponential, and the 200 moving average is the two most important. And one of the reasons why I have the 20 is I think is one of the most important, is because the 20 moving average is also the middle Keltner channel and the middle Bollinger Band, and the algos love to buy and sell off those lines on a daily chart. So I like to have multiple different indicators on my research when I'm doing research, because I want to know where the 20 EMA is and where the 200 is, and that way if I'm researching on my regression channel on the 400 on a 4-hour, that I know where those indicators are and where there could be potential, sells or buys or whatever. I mean, that's where I really need to know. So they work the best. The regression channels work the best when you're in if you're in a choppy sideways market like this, like on this chart right here. You can buy at the lower and sell, middle to upper. And if you can also, do the reverse where you have like an inside candle here and it popped, you could just wait for it to go lower, like the one below 147.50, and short it and see it went right straight to the middle regression line. And it went back up to retest that area where it broke down, and it fell through all the way to the bottom. It happens over and over and over. You could have done the same thing right here. You could have just shorted above the regression channel on the top and just shorted it down to the middle regression line. But the problem is you need to know the trend, and this regression channel works the best in a trend. Well, if you're in a sideways market, you can short above it and you can buy below. But if you're in a uptrend, you don't want to short when it goes above it because it can keep going and going. What you'd want to do is you'd want to wait for it to pull back to the lower regression line in the uptrend, and that's when you would buy. And it'd be reverse if you were in a downtrend. In a downtrend, you wouldn't want to buy the dip. You'd want to short over the regression line. And I'm sure I'll come up with a chart that looks like that. Maybe I can go to the daily on this, and maybe it will show that. Yeah, see how it's going in uptrend right here. I know this is the daily, but you see all this little consolidation in here. I mean, you could easily have bought 112 underneath the regression line and had your target right here. And you see the trend is up because the regression channel is going up. And you could have done it, well, I guess right here, but it didn't really make it up there. But I mean, it consolidated right here and it went up. But I don't like doing the daily because the daily just takes too much time. I like the 4 hour. I mean, I want to see when I'm looking for oversold conditions. I'm looking for inside candles below the regression line to dip by. So this fits my criteria. I got an ATR over 2. You can see the stochastic momentum index is considered oversold. It's got multiple inside candles. And this would be a buy right at the bottom of the regression channel with the target in the middle. And that's how I look at it for the 4. I always use the 4 hour chart, and I look for the hourly chart for an entry. I mean, it shows you right here, Algo's bought it right here at the 20, and this is probably where you should buy it. You could have bought it the next day, and it was a good swing. Went to the middle regression line, and let's see, I got some other ones here. I've done my scans to find some of these so I could show you. Yeah, same with UNP, which is Union Pacific. It's as you can see, it's in an uptrend on the hourly and 4 hourly because it's the regression line is heading up. So I mean, you got these inside candles right here and right here. I mean, you could easily have bought in it when it crossed over, or the next day after it gapped up, you could have bought that green candle, as you can see right here on the hourly on the left. That would have been a good dip buy. But I don't like shorting when it's an uptrend above the regression line, but I do look for the inside candles below the regression line on the 4 hour and hourly. And I'll see if I can grab another one. CI, I think that's Cigna. Yeah. So you can see it's choppy right here. I mean, you could even get in. You don't have to wait for this. I mean, you can get in above here. I mean, as long as you get over this consolidation period, these inside candles, I mean, right, even 149.50 would have been a good area. And like I said, a target would be middle regression line on the 4 hour. Pull back to retest it, and you could have got in over the regression channel again. Even though it didn't have any inside candles, it always likes to retest this. It doesn't always, but I mean, usually does. and like I said, it's going up. Actually, it's kind of sideways. So, but yeah, you could have had two good opportunities right there, and it looks like it's possibly setting up for another good opportunity for over 152. If you can get over 152, target would be 158 on the 4 hour on this, because it meets all my criterias. I mean, it's oversold conditions and an uptrend or a sideways market. It's inside candles below the regression line, and it moves more than $2. So it definitely meets my criteria. But I don't always stick to the 4 hour. I mean, I can also do the 1 hour. Let's see, Spotify's on there. Okay, I got Spotify. I got my scanner on, so you can see Spotify. Oh, that's in a downtrend. I wouldn't even touch that. Not for a dip buy, at least. Let's see, URI, which is United Rentals. See right here, this is a perfect example. It gets underneath the 1 hour regression line, our channel, and it pops up to the middle, pulls back, and it crosses over, and you could have sold it again. And you can see in the 4 hour where it did it. So when an uptrend, you want to dip buy below the regression channel with all these inside candles. And the reason I love the more inside candles I see, the more I like it, because that's basically saying that the stock is consolidating, it is gaining momentum, it's gaining strength to break out or dump. So depending on which way the trend is or what's happening, but inside candles means consolidation on a 4 hour time frame for a strong move. And you just need to figure out which way it's going to move, and you need to know the levels that if it goes against, like if this was to break down, you'd want to buy puts, under 101.75, and if it gets above this, you'd want to buy calls over probably say 108. Yeah, 108. Like I said, to the middle regression channel. That's how I use these regression channels. I like them on 4 hour and 1 hour time frames. It shows me the conditions and what the stock is going to do. And I usually, stay away from stocks that are choppy like this right here. I wouldn't even touch that. Let's say VRTX. Yeah, see, VRTX is perfect. It's in a downtrend. And like I said, you don't want to dip. I mean, you can, but it's kind of risky. I think that when you're in a downtrend, you'd want to buy the breakdown over the regression channel, because it's considered oversold in a downtrend. You'd want to buy puts under like 181 for the down, for the middle to lower. I mean, it got lots of airspeed right here to just dump. And right here I had an inside candle, and the breakdown would be 177. I mean, you can make it like 177.30 if you want to get technical, but I like the whole numbers. It's easy to remember. And what I usually do is, like when I see setups like this, I like to use Thinkorswim, and I would set an alert, like say, like if this was selling off, I would set an alert, like, create an alert for below 177.25. I would hit that, and then I would get the alert on my platform, and it would go to my phone. And once my phone hits the ding, I know, oh, okay, that's right. Because sometimes you watch too many stocks, you can't watch them all. So what I do is when I see these setups like in a downtrend over the regression channel, I'll set an alert right here and just forget about it and do what I need to do. And when I get an alert, I'll go back and look at it and say, okay, that's right. I knew what I was going to do here, and that's what I was going to do. So let's see if I can find some in an uptrend. Let's see. Oh, of course I can't find it in this 4 hour. Nope. I'll just look for inside candles then, so you can give you more. Okay, we get like UPS come up. And UPS, I mean, look at UPS, it's doing the same thing. I mean, this would actually be a good one to watch, because it's wedging right here. It's got a wedge right at the bottom regression line, and it's in an uptrend because the regression channel is pointing up. So anything over 119.50 would be a good buy for calls for the target of 121, 122. And as you can see down here, the MACD lines are getting closer. They could curl up. So this is gonna this should be something we should watch this week. Actually, you know what? I'm going to create an alert that when it gets above 150, it will alert me, and that way I know to buy calls if it gets over that point. But yeah, that's what I do. That's how I look for my swings. Like, I don't like to swing too much now because of all this political noise with Iran and the oil, Saudi Arabia, and the impeachment and trade deals and North Korea and all that other crap. Even though North Korea is not a problem right now, but I look for inside candles in and outside the regression channels, and I have to determine which way the trend is, and that is it. That's basically how I look for a good swing. I hope that helped you, and have a good day.